Hello and welcome to the day ahead. It is Friday, June the 10th. I'm Andrew Gagan. Well, kicking things off on a global stage, world equities taking a hit, led by a drag in European shares after the European Central Bank signalled it will hike interest rates next month for the first time since 2011. Eurozone borrowing costs hitting an 8-year high on the back of news, with the Pan-European Stock 600 index losing 1.4%, and the MSCI's gauge of stocks across the globe shedding the same amount. While the decision was widely expected by the market, the possibility of a larger hike from September weighed on investor sentiment. Bond dealers pushing Germany's 10-year government bond yield to its highest level in 8 years. US Treasury's 10-year note also higher. Well, Wall Street took a hit overnight amid a broad-based sell-off led by tech-heavy Nasdaq as investors grow cautious ahead of tonight's key CPI data expected to show that price pressures remain at boiling point. Stock specifically, Alibaba Group, Baba, slid after its affiliate Ant Group said it has no plans to initiate an initial public offering. Tesla, meantime, was lower despite an upgrade to buy at UBS as the broker sees upside of more than 50% thanks to the company's long-term growth prospects. Shares of Las Vegas Sands fell more than 5%, with tech giants Meta and Amazon dropping 6% and 4% respectively. All right, well, diving deeper into the macro events overnight, the European Central Bank has ended its stimulus scheme and will hike rates next month for the first time since 2011. Inflation in the Eurozone has pushed above 8% and is still rising, and the ECB fears a breakout in wage growth. The central bank will end quantitative easing on July the 1st, then raise interest rates by 25 basis points on July 21st, with the intention of going again in September with a bigger move, with some policymakers advocating a larger move next month.
The calibration of this rate increase will depend on the updated medium-term inflation outlook. If the medium-term inflation outlook persists or deteriorates, a larger increment will be appropriate at our September meeting.
Galloping inflation has been driven by rapidly rising energy and food prices stemming from COVID lockdowns and Russia's invasion of Ukraine. The bank has upped its inflation projections for the Eurozone from 5.1% to 6.8% for this year, moderating to 3.5% next year. The ECB's deposit rate has been in negative territory since 2014, currently at minus 0.5%. Markets are now pricing in 144 basis points of rate hikes this year and has the deposit rate at 2% by the end of next year. Well, the euro initially rose in response to the ECB's move, but later fell back as risk aversion took hold, the US dollar index having moved higher, with the Aussie falling back to 71 US cents. On the data docket, US weekly initial jobless claims were slightly higher than expected at 229,000, with the steady climb in claims suggesting a slowing in payroll growth. So locally, the negative investor sentiment will again pervade the local markets, with SPI futures indicating the heavy selling in yesterday's session will continue today, currently off just over 0.75%. Global oil prices have eased on reports of new lockdown restrictions in Shanghai. Brent crude falling 0.4%. Base metal prices were lower, with nickel extending its losses, and gold futures were down marginally. And Bitcoin was fairly flat overnight, with sentiment still bearish, with most altcoins outperforming Bitcoin, indicating a greater appetite for risk among short-term traders. Well, a quiet day on the corporate calendar for locally listed shares. However, all eyes will be on the miners after iron ore futures slipped late yesterday as traders continue to fret over weak profits at Chinese steel mills, as Beijing reinstates a fresh round of COVID alerts in Shanghai. Entertainment venues and internet cafes in Beijing's largest district were ordered to be shut on Thursday after an outbreak involving bars was detected. Well, that is the day ahead. We'll see you again on Monday.